Hi, this is Anthony. Thanks so much for watching my podcast. So if you're a shareholder in Nano Dimension, stock symbol NNDM, an Israeli-based high-tech company that is traded on the NASDAQ stock exchange, you probably saw last week that there was some big news about a possible takeover, but of course don't get too excited about it yet. I want to keep today's video very short, so let's look at the news, and here's what Seeking Alpha reported. I'll also have the link to it in the show notes. Nano Dimension rose 16% after a report that the top shareholder of the 3D printing firm offered to buy the remainder of the company it doesn't already own for $4 a share. Murchison Ltd is said to have made a non-binding offer to buy the company for $4 a share, according to a Bloomberg report. Murchison, which owned 10 million shares, made this offer in early September. The $4 a share offer represents a 66% premium to Nano's Wednesday close. Nano Dimension shares have fallen 37% this year. Nano Dimension's short interest is 7.3%. Lastly, Monday Nano Dimension said it sees Q3 revenues at $10 million. So what do I think about this? I'm not a financial advisor, I'm not a lawyer, I'm not an expert in mergers and acquisitions, and of course my videos are not financial advice, simply financial entertainment. That being said, on Friday, after the market had a day or two to digest this non-binding offer, the stock closed at $7 or at $2.76. But if we look at a chart for the week, you'll see that it went from approximately $2.50 up to $2.76, and the chart shows that it was slightly over 12% gain for the week. But let's look at some longer charts, and we're not going to spend much time on them because I do that in all my other videos on Nano. Year to date, the stock is down just over 32%. Not too bad when you consider that we're in a bear market and a lot of other stocks, including big name profitable companies, may be down that much or more. But let's look quickly at a long-term trend, and we see that the company's lost 96.5% since September 2015. The whole purpose of investing in stocks is to make money in the long run. Very rarely has anyone made any money buying and holding this company's stock. Many people who are viewers of my videos have bought into Nano at higher prices than what the stock trades at today, often in many cases higher than the $4 offer price for the takeover. Remember, if that price was accepted by the company and Murchison was able to buy the outstanding shares at $4 apiece, you as a stockholder would be forced to accept that $4. This offering scenario doesn't mean that the purchaser buys most of the stock for $4, but some of it still trades on the market, and over time it's going to go up. If you're a shareholder and the company's bought out, you're not going to get more than the buyout price, even if you hold on. The Seeking Alpha article and other outlets that released the news last week state that the offer was made in early September, yet it didn't become public until early November. Why hasn't management at Nano notified the public and shareholders of this potential offer? In the United States, directors of public companies have a fiduciary duty to the stockholders. This means that if there's a buyout, directors are supposed to get the most amount of money for the stockholders. Unfortunately, this can force directors to make decisions that are not necessarily in the best interest of the long-term health of the company or the long-term employment and welfare of employees of the company. While Nano is traded on the NASDAQ, which is in the United States, it is a foreign company, and American security laws are more lax for foreign domiciled companies, which have stock traded on American exchanges. I have no idea what Israeli security laws require of directors of financial companies there. And lastly, before I end, let's look at the last bit of news, that Q3, their revenue is estimated to be $10 million. Assuming that's true, that's a decrease from Q2, when the revenue was $11.1 million. And of course, they lose more money than they make in revenues. Of course, as I point out in almost all of my videos on this company, they are consistently losing money quarter after quarter. And we all are aware that they have about $1 billion in the bank. We don't need to beat that dead horse any more than necessary. While it's better for the company to have that money than to not have that company or that money, potential investors need to be careful when factoring in the money and how they evaluate the company. The company is not going to give you any of that money in dividends, and they have shown throughout history that they burn through money rather than consistently making retail products that they can sell for a profit. Okay, I know a lot of people have very strong opinions one way or the other on this company. I would love to hear from you, even if you disagree with me. Please leave your comments in the comment section below, and I would really appreciate it if you hit the subscribe button. It doesn't cost you anything, and please click the like button on this and other videos. That's all for today. Thank you very much. Please look at my other videos that focus on this company, as well as other companies that you may not have even heard of. Thanks for watching, and good luck in investing.